In a time where fear and uncertainty grip the market, dominated by talks of inflation, interest rates, and a looming recession, where does the Toronto real estate market stand? Today, we are going to take a deep dive into this topic and more. Welcome to today's Toronto real estate conversation, where we go through the noise and seek expert insight. Our guest today is no stranger to the nuances of real estate. President of Bullpen Research and Consulting, Ben Meyers, boasts over 2 decades of real estate research experience across North America. A respected voice in the housing market, he has been at the forefront of industry insights, heading from research arms to being the executive vice chair of a top condominium data tracking firm in Toronto. A recognized figure in the media, Ben has graced platforms such as BNN, CBC, CTV, and has been quoted in international giants like the Wall Street Journal and the New York Times. His written perspectives are sought after, appearing in esteemed outlets like the Toronto Star, Huffington Post, Livable. Educated at prestigious institutions, including Columbia and MIT, Ben's in-depth knowledge has guided top developers, major banks, and international hedge funds. Today, we're privileged to have Ben here with us at Fox Marin to shed insights on the future of the Toronto real estate market. Welcome, Ben.
Thanks, Ralph. Thanks for having me.
I would like to also introduce one of our Fox Marin superstar agents, Jerome Wernuik. Jerome has a ton of experience in both commercial and residential sectors in both Canada and the US. He has a great perspective on the economy, politics, real estate, and technology, and is the perfect co-host for today's discussion. We're so excited and happy that Jerome could be with us here as well.
Thanks for having me. I'm excited for the conversation.
Awesome. Well, I'm really happy that we're all able to get together here, especially with Ben, because we are having so many conversations with our clients right now in this climate, trying to get a sense of where the market is at, how to navigate through all the uncertainty, all the media noise that's going on right now. And the conversations are just very, very intense and emotional. And we thought it would be awesome to have Ben here to help us and to help our clients and to help our viewers try and get a better sense of where we're at and potentially where things are going to go. Ben, I'm just going to throw this right at you. What is happening in the Toronto real estate market right now? And I know that's a really wide question, but just from your lens, like, what are you seeing?
Sure. So I mostly operate in the new housing business. So my business is doing essentially residential market studies for new condominium projects and for rental apartment projects. I occasionally do a letter of opinion on land value as I track that really closely. So most of my lens is through the new housing market. Obviously, there's part of what I do is look on a site-specific basis at the resale market, because I need to understand the kind of the value gap between new and resale housing. So, from the perspective of the new market, it really was, crazy busy and booming, really from April of 2020 to March of 2022. So really unbelievable that the market would be so strong during COVID. We had emergency low levels of interest rates that fueled buyers being interested in purchasing condominiums, which always seems strange when you're not going to close on that condominium for 3, 4, 5, 6, and even 7 years out to get excited about buying pre-construction condominium because of low interest rates. But that's a discussion for another day. So the market became really, really strong. A lot of projects came on the marketplace. At the same time, there was inflation, as everyone knows. There was issues with getting products to Canada, and there was a shortage of material, so that drove up construction costs. And because demand was very strong and costs were going up, not only for product, but for labor, for development charges, for government fees are being raised. So we had, cost push inflation as well. There'll be a few economists that will tell you that it doesn't exist, but it certainly exists from my conversations with developers. If their costs go up, they have to try to pass on those costs to the purchasers, because they need to maintain a certain margin when they're launching a new condominium project. So and really to get lending, you have to deliver a certain margin. So it really drove up the price of new condominiums, And then when the Bank of Canada finally decided that inflation was running way too hot, then we need to raise interest rates. That has cooled the market extremely. 10 interest rate increases later, sales are down. I don't know what the number was in the new market, 60% year over year, but sales are still happening. Projects are still launching, and as you know, Ralph, you sell some of these projects. There's still buyer interest out there in the marketplace. They, investors that are buying pre-construction condominiums still see that Toronto is going to be an extremely desirable place to live. They think that inflation is going to go down, as many economists do. From some of them saying by the end of next year we'll be back down to 2%, while others think. A recent consumer survey showed that people think inflation is going to go back down to 2% within 3 years. So that's kind of the way people are thinking. And if the average condo project is 1 year in pre-construction and 3 years under construction, well, that's 4 years. So interest rates are expected to go back down at that point in time. So there's still some bullishness on the future of the new condo market, but pricing got a little inflated in relation to the resale market, where you guys do a lot of your work when investors starting to look at the value gap between a new and resale condominium, and that had typically been 15 to 20%. We started to get up to 35 and 40%. So there was some real trepidation or nervousness, or whatever the word you want to use about that gap. And so there was it's been a slowdown in the new condominium market. On the rental side, obviously a lot of people that would have been buying new condominiums or would have been buying resale condominiums are saying, we're going to forego that because, one, we just can't afford it. Two, that they're just nervous about the market. Whenever you see pricing either stagnant or going down, it discourages people from buying. They don't want to put in. They may only have 5% to put down, and they don't want to see that 5% erased, on paper within 3 to 4 months, right? So even though they may have no intention to sell in the future, but obviously they can't always control their employment situation. So the rental market has been red hot. It's calmed down a little bit in the second half, or not the second half, at least the last 4 or 5 months. But for a while there, we were seeing rent increases of 20, 30, and even 35% in certain neighborhoods of Toronto. So just unbelievable growth. And eventually there will be some arbitrage, right? As rental rates start to get so high that it makes sense again for people to buy. So I think there's a lot of people with much higher mortgages than they anticipated, and they're nervous about it. So, and I think from again going back to my new home perspective, developers are the same way. There's a lot of developers that just feel like the rates are too high, demand is not there, the rates they're going to pay on a construction loan are too high, and it makes them feel a little bit nervous. So they're holding back launches, and it's in the long run, it's bad for our marketplace because we're not going to get the level of supply to service the demand, but it really just means that prices are going to eventually go back up because we're not going to deliver the amount of supply. But in the new condo market, it's quite a long cycle, obviously, between a lack of launches in 2023 and then a lack of completions and a lack of supply in maybe 2026 or 2027. So it's hard for someone making a resale purchase today to say, okay, there's definitely going to be a major lack of supply in 2027, and how does that impact their decision? But I think each individual person has got to look at their own financial situation and try to make that choice. You really don't want to sell into a depressed marketplace, but if you're looking to buy, I mean, that's the time to buy, right? Is to buy low. But I understand how difficult it is to make that decision for people who've never bought a home before. So, sorry, a little bit of rant. So, kind of my high level thoughts on what's happening right now.
On the new construction side of things, Ben, obviously there's a lot of developers that are holding back launches, and they're going to push off till rates are lower. There's more demand. There's a big delta, like you mentioned, 40-50% between resale prices and new construction prices. I think somewhere like $1,500 a foot versus $1,000 a foot. The people that are still buying new construction right now, do you have any insight into if that is more heavily weighted towards end users versus traditional mix of end users versus investors when interest rates were lower?
Most of these projects you're buying, the majority of buyers in any of these projects are investors. And that will hold for a project in downtown Toronto, and it will hold for a project in Clarington, Ontario, right? It may be 51% investors in an outer suburban market, right? Versus 95% in a downtown condominium, right? So we haven't seen a lot of traction in several of the downtown launches. They've been much slower than the developers probably would have liked. And again, that delta was pretty big, and it's probably the highest priced resales that you'll see out there in the market are $1,200, $1,250 for a standard 500 square foot product, but that new home product is still $1,600, $1,550 a foot, right? So that gap is still a fairly big gap, but unfortunately construction costs don't come down quite as fast as resale pricing, because what's under construction reflects what's happened in the past, right? So all these projects that sold during our booming market are still under construction. And we also still have subways and infrastructure and rental buildings. They're all under construction. So there's a lot of, still a lot of demand for our trades. I'm hearing that stuff starting to come down a bit. So will that move the needle a bit on the new condo market? Perhaps. But just recently we had that GST announcement from the federal government that applies to takes that tax off of new rental apartments. So that should spur some rental apartment construction. I do some work for REITs, for other companies that have a lot of land that they want to do rental, and they want to retain ownership of those lands. And they're starting to warm up again. They're starting to warm up again to starting construction on these products. So despite where the interest rates are, they do see the light at the end of the tunnel. They are seeing several of the economists or the people that are experts in this industry saying that we're not going to get further increases, that we finally stopped. So I guess we've got the 25th, I think, is the next rate announcement. So we'll find out if they are accurate in that. And some people are already calling for declines in rate cuts in April of 2024. So we'll see how accurate they are in that side of things.
And I think right now the market is so dependent upon how this interest rate inflation narrative plays out. And I know you get to have a lot more high-level conversations with a lot of people who are economists and developers. Based on all of the conversations that you've been having, what is your just gut feeling? Because nobody knows, and anybody who says they know has been proven wrong over the last 2 years. So I'm asking that question just to hear if you were to sort of just shoot right from the hip, what your feeling is based on the conversations you're having and what you're seeing as a trained analyst and economist.
Yeah, I mean, I think inflation's going to come down. It was a little bit shocking that we had got inflation down to 2.8%, and then it jumped right back up to 4% the very next announcement. But always, makes you just start to question Statistics Canada and the groups that pull this information together. I mean, someone that has worked at a data tracking company, and I realized how difficult it is to track some information and how much estimation goes into some of these some of the data that gets published, and how much is missing. Right, that really only the guy that works on the the actual numbers knows what's really missing and where the errors turn out. So that's always something that makes me, being a data guy, to question how accurate some of this information is. But my gut feeling says that things are going to start to go back to normal. All these plants in these other countries that were shut down because of COVID and because of social distancing, all these seem to be moving back forward. I mean, I heard there's structural type changes where some companies decided, hey, we need to bring manufacturing back to North America because we don't want another situation where our boats are stuck in ports and things are not coming, and that's disturbing our business. So as much as the how much lower it is to manufacture these goods in several of these other countries, maybe it makes sense to move some of that to North America. So that just translates into higher costs, right? It may be lower long-term risk for these companies, but higher cost to the consumer. And as it relates to housing, every time you turn around, there's another new green feature that needs to come in. There's another building code change that needs to come in, and that, as much as we want to protect the environment, it all has a cost. These things are all expensive, and that's only going to lead to more inflation. But I think that we're going to eventually go back to normal, and I think maybe that's 2025. We get back to kind of a 2% inflation rate. The Bank of Canada can start cutting rates to stimulate the economy. We've come out of this pretty good, right? If you look at the,
I'm knocking on wood as you say.
We've if you looked at the unemployment rate in Canada, it was like near a 20-year low earlier this year. It started to tick back up, and even Ontario was at like a 25-year low earlier this year in terms of the unemployment rate. And then, as a real estate guys, you absolutely know that the immigration and the population growth in Canada and Ontario has been, just absolutely enormous. We're talking in Canada, 1.2, 1.3 million new, growth in population on an annual basis. And 500,000 of that is like Ontario, right? In comparison to, the typical Canada had been 350,000, right? And so we're getting that many in Ontario. So if there are people that are working, well, there's going to be demand for housing, right? So we can only stick so many people in one house, which there seems to be more of, and I'm sure you're seeing a lot of that on your side. A lot of people in their 40s didn't think they'd be having roommates, but they, that's just the way. If they want to live in the city of Toronto, they have to do that. So there's been some adjustments in the geography of where people are living and how many people per household and how big the unit sizes are, right? So those things are all adjusting. But in my consensus, if I was to give you that, if I had to put my feet to the fire, I think 2025 we're going to get back to that Bank of Canada target rate of 2% inflation, and we'll start to see interest rates be cut. And I don't know how much, but we might see the first cut in 2024 and maybe the second and third in 2025.
Awesome. And what are the conversations that you're having with REITs and developers? Because I find them to be far different from the type of conversations that we're having with our clients or potential clients, because their decisions are far more immediate and oftentimes they're much more emotional. But when you're talking to people looking to make decisions today that have ramifications 3, 4, 5 years out, like what is the mood on the street? Like what sort of conversations are you having right now?
Yeah, and so there's generally two types of clients that I have. The ones that are have a lot of capital and access to capital, and they're being very patient, right? They're in no rush to start construction on rental buildings. And then there's a few of kind of the first time developers, right? So that interest clock, that carry cost is burning a hole in their pocket, right? So they really, really want to get a sense of value and revenue potential in the marketplace because they want to launch as soon as possible, but they really don't want to go out and fail because that just, that's going to lose them a lot of money if that happens. So they really want to be sure. So they're checking back with me on a fairly regular basis. And so it's an interesting dichotomy. I still do have some, really large developers that I work with. And some of them are launching projects right now, right? They've got a machine that they need to feed. They got a lot of employees. They bought their land at a good number. They have good relationships with the trades and they convince them that, hey, the market's down, right? There's not going to be as much under construction in the future. You're going to be without jobs in the future, right? You want to stick with us because we do a lot of business, and we want to bring you on. If you treat us well today, we'll treat you well in the future. And they have that market power, so they're still going out to market. So you see these not all my clients, but you see who's out there launching these days. Tridel, you're seeing Center Court, you're seeing Capital Developments, you're seeing Menkes. The very most successful developers are the ones that are launching the larger buildings out there, as opposed to some of these first time developers. So there really has been typically we would say a flight to quality is a flight to quality downtown, where the transit is, where the jobs are. But the flight to quality now has been more to quality developers, because I want to make sure that these projects can qualify for financing. And if you've got a good, obviously if you've got a good track record and you have significant assets behind you, then you can get that construction financing. You can get the deals with the Schedule A banks, and you can get the preferred rates. Whereas, someone that's doing their first project might be 2.5 years in pre-construction, and they still might cancel it. So your money's been tied up for a long time. So I think there is a flight to quality out there in the marketplace, but we love real estate in this country, right? People just love real estate, and they want to buy and they want to find a deal. And if they feel that, the market is soft today, that there's deals to be had. So there's lots of deals being done. Incentives are being offered that I have no access to, right? So I don't know the real numbers on a lot of these projects, right? I don't know, where they're actually coming at. And so that's, again, makes it a little more difficult to assess where the market is. But generally it's bullish. I still have clients that feel very strongly about the long-term prospects of the Toronto market. They think people are going to go back to the office a lot more than they are today. They're going to want to always still be where the action is, where the bars are, where the restaurants are, where the single people are, where the universities, the hospitals. So they feel very, very comfortable buying in the city of Toronto, but they're looking for deals, right? So
we've seen a bit of a resurgence over the last sort of 5 years, call it, of new construction, purpose-built rentals come up and done quite well overall. A lot of new developers and institutional money in the space. There's a huge glut. There's basically no purpose-built rental built for, I guess it was like a 30-year span. That's why we have all these 1960 parquet sort of towers in the park, and then a few new shiny purpose-built rentals. Obviously, policy around rent control plays a massive impact into the incentivization of a developer to build purpose-built rental versus a condo. With the sort of slowdown in launches of new construction condos, purpose-built rental developers impacted the same way as condo developers, given that rents are continuing to climb?
Yeah, well, I mean, even when you look at the discount that we're seeing in the price of new condominiums, it still makes more sense to build a condominium than it does a rental apartment, right? When you run the numbers. I mean, I'm not a guy that's analyzing pro formas, but that's certainly what I hear from my clients. There's just a different group of people that are operating in the rental space. For the longest time, multifamily was not an institutionalized asset class. Right? It was, office, retail, industrial, right? But now multifamily has gained acceptance into that industry. So, and now that, interest rate, that rent control was taken off of new buildings in November of 2018 after it got put on in 2017. So there's still, institutions that want to invest in that, own these assets long-term, them to be Class A buildings, high rents, high quality tenants, very amenitized, high quality and finishes, even higher than condo quality finishes. So there's going to be a small percentage of those that come onto the marketplace. There's not been a lot of people that have done them, right? It's difficult. There's not, revenue certainty. There's still a lot of equity requirements up front, whereas, in a new condominium, you can borrow against the deposits of the purchasers for your financing. You can't do that in a rental. And obviously, in a condominium, you've pre-sold the units, so for almost all of the projects that have gone under condo projects that have gone under construction, where 80% or 90% of the revenue is coming from, right? You have signed contracts with these people. Whereas an apartment, you can underwrite it and it can look great, and you could get a great, fantastic rental report from Bullpen Research and Consulting. But we don't know where rents are going to be in 4 years from now, right? They could be 20% higher, right? But they could also be 10% lower. And I think COVID really shook the foundations of anyone that was in that business about, if you had said, Ben, bet your entire net worth on whether rents would go down 20% in a single year, I would have done that in a second. There's absolutely no chance that rents would decrease 20% in a single year. We have a 1.5% vacancy rate. Like a 2% is the frictional vacancy, meaning there's always going to be at least 2% vacancy just because of people moving at any one time and moving to a new apartment. So it really, I think, shook a few people that, things can happen way outside of our control. Is anyone predicting another pandemic? But they're certainly not giving it a probability of 0 or 0.1 as they were before. So it is interesting. I think there will be more. We're now kind of getting into that 3,000 to 5,000 new purpose-built rentals being built in the GTA. I think maybe we'll get 5,000 to 7,000, but still nothing that's close to servicing that demand. We're still going to need investor-owned, private landlords renting condominiums to service the industry, which we probably need, 17 to 22,000 new units being added to the GTA every single year, maybe even 25,000 to service demand. 20,000 of those will be in the form of apartment style, so condo and rental apartments, and probably anywhere from 12 to 15,000 of those will need to be rented, right? So there's still going to be a pretty significant shortfall if we're only delivering, as a maximum of 7,000, purpose-built rentals. So the investors will still need to play a big part in servicing the demand in our marketplace.
I also fear that there's tremendous policy risk on the purpose-built rental side. We've had a shift in the municipal government that has blatantly stated they want to bring back carpet rent control. Our current provincial government, although they brought in the change of removing rent control from November 2018, they look like they're a bit on the ropes right now with a pretty big scandal and RCMP investigation. And the other two parties have come out and basically said that they would love to get their hands on bringing back rent control. So, it concerns me that actually could be an eventuality, or certainly there's a risk to that happening. And so if I was a developer, I'd be very concerned about that. Are there any conversations surrounding that?
Yeah, obviously, I ask my developers all the time, hey, if rent control came on, would that impact your decision? And a lot of the smaller guys say absolutely yes, right? Some of the developers that have, they have a fund, they got a $500 million fund, they got backing from a international pension fund, then they're more likely to say, we'll set the rents aggressively. We feel that we can afford some vacancies and wait for the right tenant to come at these higher rent levels. If we get a certain amount of vacancy, then we'll be able to turn the units over and make back some of the issues. But if inflation stays in this, if the economists are wrong, we continue to get 4% and 5% annual inflation rates, then that policy concern will probably be even higher, right? That their costs are going up much higher than they can recoup in rents, and maybe they'll decide, hey, we've got to make a change in the tenure of this project, right? Which is unfortunate because I think, I'm in the condo business, but I realize from a tenant perspective that it is pretty nice to have security of tenure. It is nice to have on-site property management. Not everyone has a great landlord owner like Ralph, who takes care of his tenants and goes in and changes the light bulbs himself. And
well, let's not go that far.
Plunges the toilets from.
I got people for that.
People for that, yeah. So I think it is nice that there is some purpose-built rentals, especially for older tenants. Or I think for a lot of younger tenants, if it means they save $100 a month, then I don't give a crap about security of tenure, right? Like if you sell it, I'll move somewhere else, right? They don't have a lot of possessions to move, and it's not as big a deal. But someone that's selling their $1.5 million house and moving into a rental apartment, they don't want that to be sold out from under them, after a year, right? They want to know that they're going to be there. They want to know when they pick up the phone and ask that something be done, that there's a guy that can come up and do it right away. And they don't want to leave a message on an international phone number, right, for their investor owner of their apartment. So I think there is a desire and a need for more of that, and
Sure.
And I hope that if, again, I'm a left-leaning guy. I hope if the liberals come in, they're a little bit smarter than they were last time around, and that the Catherine Wynns of the world don't read one article in the Toronto Star and change policy based off of one person getting screwed. But I hope that our governments are a little bit smarter and realize that you can't strangle the market into working. Right? You have to deliver the amount of supply to match demand. That's the only long-term solution to keeping housing affordable. But part of it is we live in a world with limited resources. There is only so much land in the GTA, right? And if you are going to take some of that land and say, you cannot build high-rise here, or they're going to say, oh, we like 4 to 6 story buildings. That's what we prefer. But developers, a lot of them cannot make money on those, so they're not going to build them, right? That's just the way that it works, right? And so unless we designate more areas for high density, we make it easier. We don't charge development charges that are higher than any city in North America and expect that, housing is going to be cheap, right? I mean, it's pretty simple to understand, right? That, in New Jersey, one of the developers that I had on my podcast, the Toronto Under Construction podcast, Zev Mandelbaum.
Was that Zev? Yeah.
Yeah, Zev Mandelbaum.
Yeah.
He was talking about, he's got a rental project in New Jersey, and the entirety of the government fees charged per unit on that building is $12,000. So a project that he is doing in Toronto, the average is $350,000 per unit. So you think that people say, oh, developers are so greedy. $350,000 of a single, on average, per unit is going to the government, right? And people will complain, well, we need the services, we need this. I'm like, how much more expensive do you think a community center is, or a subway line is in Toronto in comparison to these other American cities, right? Maybe they're not building subway lines, but they building infrastructure, right? I lived in Texas. I see that they somehow have no state income tax, but can still build 12-lane highways from here to Timbuktu every single year, right? And deliver all this infrastructure that's needed to service their residences. Somehow we can't do it.
I hear developers talking a lot about this inclusionary zoning policy and how difficult it is to make things work with that encumbered on them. I find it really interesting. Do you have a few points on that?
Yeah, I mean, I've actually always been a fan of inclusionary zoning, but meaning that every project that gets built, a certain percentage of the units should be affordable housing, but not the way that they've gone about it. So basically, they've just put the entire burden on the development community. They're just like, you should just do this, right? It's the same as if, they would just, okay, Walmart, you want to build a Walmart? Okay, 10% of the products that you offer should be, affordable, right? You go into the grocery store. Where's the affordable food section, right? It's ridiculous, right? If you want affordable housing, then the government should pay for it, right? We're private businesses. The private businesses don't have the responsibility. That's the government's responsibility to take care of people that can't afford the market rates, right? And there's best practices. They're done all over the globe, right? Where they give them discounts on their development charges. They give them discounts on their Section 37, which is now the community benefits charge. Give them a discount on their building permits, or fast track their development applications. Give them 10 more stories. Some type of financial agreement to allow them to build it. So now it's just a cost. It's just a cost, right? So that has to be built in. So that has to be recovered somehow. The traditional economists will say, well, you just come out of the land, right? So your costs are up. So the land is the residual in that relationship. So just pay less for land, which it's just easier said than done, right? Every vendor has an expectation of what their house is worth, and their property is worth, and they stick with it, right? We're at the point where there's not a lot of easy sites anymore, right? There's not just, a bunch of parking lots sitting around that developers say, where the owner says, oh, that's $30 million for me, right? These sites have businesses on them. They have long-term leases, right? They have income on them. So what they get from the developer has to be significantly higher than that income. I have talked to plenty of landowners, and they say, my number is $45 million. And if I don't get that, I'm going to pass this 6-story office building off to my children, and they will manage it, and or they'll pay for someone to manage it, and it's just money for them, and I'm happy to do it, right? So they're in no rush to sell their properties, right? And that's kind of the fundamental issue: is it can't always come out of the land, right? That's kind of their argument, right? They just pay less for land, right? But it's just another cost, right? I would love to see it because I think it makes sense. I think we'd have a much better relationship between residents in our city and developers if they knew that every single condo building that went up, 10% of those units are for rent at $1,000, $1,500 a month, and it would be people would say, okay, that's great, right? But not just saying, hey, we think you make a lot of money, you should do this, right? I mean, that's not the way that our business works, and what it ultimately does is make more sites unviable. They don't get built. We don't deliver enough supply. Prices go up, and it adds even more people to that number of folks that need affordable housing, right? And really, we started talking about a housing crisis over the last, 10 years because the middle class are now priced out of ownership housing, right? Prior to that, when it was only, that retail worker, that, person making minimum wage that couldn't buy anything, well, who cares about them, right? But now that's the middle class, now it's, my little boy Johnny can afford something, then, it starts to be an issue. And finally, we're starting to take notice of it. But still, people dislike developers. They dislike high rise. But again, we live in a world with not unlimited resources, right? And if you decide that we don't want to build in the Greenbelt and we don't want to build anywhere close to the GTA in a low density form, well, we got to go up, right? That's the only way to do it. So
on the topic of, I guess, middle class is leading into this, but right now, 15 years ago, a divorce separation between a couple, people are normally arguing over who keeps the house. And now people are, 50% under market rent, and people are renting until they're older before becoming first-time home buyers at 35. The argument when couples are breaking up quite often now is who gets to keep the rental property, because whoever has to move out is going to be paying twice as much for the same rental property. It's just another sign of where things are at now. I had a question around first-time home buyers, and average prices, average rents have gone up so dramatically over the last decade, 15 years. We get a lot of first-time home buyers either talking to us about educating or actually going out and to buy properties. Anecdotally, just about every single first-time home buyer in the city is getting help from their parents on their own. Just almost impossible to save a down payment and make sense of buying a property for the first time. I'm curious if you have any insight into what percentage of first-time home buyers or buyers in general are tapping into this great transfer of wealth between the baby boomer generation and my generation.
Yeah, there's been a few studies that have been put out. Mortgage Professionals Canada typically does one in conjunction with economist Will Dunning, and I think just trying to recall at the top of my head, I think it was 20-30% of these first-time buyers are getting help in some way, right? And I think it's an unfortunate situation where wealthy parents can help out their wealthy children, and then they start to get into the housing where we're completely undersupplied, and pricing will continue to go up, and they will benefit from it, and they'll pass it on so people who've been priced out will never ever get in, right? Because they just don't have that down payment. So it's an unfortunate situation, but it's the reality of our market right now. There's too much demand. We are victims of our own success. And if I had any advice to a first time buyer, it would be buy as soon as you can, right? And even if it's 275 square feet, right, to buy that unit, because we will, and I'm pretty confident of that, continue to undersupply the Toronto real estate market for the rest of my lifetime, right? Is we talked a little bit about policy that we're trying to come in. Once, if we do get an NDP government, or we do get another type of government that wants to put in rent control, that's just going to decrease housing supply. We want to, someone's going to come in and say, well, every single building has to be a certain level of green, and it's just going to add more cost and less will get built. And then we're just there'll continue to be arguments over zoning and where we can and can't build high density. And at some point in time, there has to be a better connection between the prices of new condominiums and the rental rates in the marketplace. And there's been a disconnect for a while now. And so that will need to come back in line. There is problems with the delivery of housing supply in our marketplace. So my advice to someone is, if you can get in, if you can somehow scrape together that down payment, however small that unit is, I advise getting into it and just readjusting your expectations, and even taking a flyer on neighborhoods that you wouldn't have thought of moving to, and just say, okay, well, I live in Main and Danforth, and there's a GO train here, and a lot of people have no idea that there's a GO train at Main and Danforth. So basically, I can get from my place to Union Station in 11 minutes, and no stops. So I used to work at Yonge and Bloor, and I would take the subway from Yonge and Bloor to Union Station. It took a lot longer than 11 minutes, right? So people think that, people were kind of shocked to hear that, right? They're like, oh, Victoria Park, Gerrard, that's like the suburbs, but amazing how quick. So I think a lot of people will start to reassess some of these new places, and developers are taking notice, right, of the Eglinton on either side. Fingers crossed that the crosstown gets built, but either side of those will see massive density. So I would say if a first-time buyer can try to get in on one of those first projects that are getting built, there's going to be huge growth in those areas. I think an area that's going to explode is Weston. So that would be an area if someone's thinking about just trying somewhere new, right? I think that area is going to explode. I think there's going to be a full-scale redevelopment of the Weston and Eglinton area. I already got the Up Express. They got GO train service. They will have the subway, right? So it'll be a really interesting spot. It's not too far from the airport. There's a college campus up there, and I can't even remember the name. That's how terrible it is, but it's still not that far from York. So that's an interesting spot. And some of these re-emerging downtowns. I know that you had mentioned in the show notes, and I hate when people do this, when I send them my show notes, and then they start talking about a question that you had in the future. But Pickering has been a really interesting spot, right? They're actually going to create a new downtown there, right? It's serviceable by the GO train, and yes, maybe it's 30 minutes downtown, but if you're getting on at Pickering, you're probably getting a seat. So it's they have quiet cars, so it's 30 minutes that you can just get away from your family, right? And escape your noisy children. And so I think that's going to be an interesting shift in some of these suburban marketplaces where they build essentially a small downtown. We're seeing a little bit better environment around the Mississauga city center. It's definitely some wide streets there that kind of kill a little bit of the environment there. But there's some bigger projects that are putting in a lot of amenities, some big master plan projects. It's going to be a much better environment. Obviously, Port Credit is building up as well, and I think that's going to be an area that really grows in terms of its value in the marketplace. And we'll see what happens. There's some major developments planned in Richmond Hill as well, along the future Yonge Street line and the expansion of GO service there. And we're also starting to see a little bit of a community be created in the Vaughan Metropolitan Center, right? I think it's going to take a little bit of time, kind of like City Place. If you go to City Place now, it really kind of feels like a community, right? For a while there, it just felt like generic buildings, right? But now, if you go to that little park there, there's yoga going on. There's people out exercising. There's farmers markets popping up. So it's creating a little bit more the typical Toronto feel. I would have loved if there had been more retail and more mixed use put into that development. So there was a little bit more, 9 to 5 action in there. But I think developers are smartening up, at least the residential developers, right? They're partnering with the smart centers of the world. They're partnering with Trinity Developments. They're partnering with people that understand the retail space. And they see the value in some small scale office as well. So not these big, massive, lawyers firms, but small independents, and so they can just have their small condo, and then they come down and they actually even have an ownership office in the bottom of the condo that they live in, right? That they can bring people to, and they can have that kind of lifestyle that a lot of us enjoy that are kind of independent. So yeah, so I think there's opportunities out there for first time buyers if they want to look for them, but you can't just, I live with my mom and dad in Forest Hill, and now I want a big 3,000 square foot house within 10-minute walk of my parents' place. I think they need to realize that is just not an option, and to stop thinking about it and just realize, hey, when I eventually do get that giant house in Forest Hill, because I took 7 steps to get there, it'll be so much more valuable than begging my parents to take a massive third mortgage on their house to pay for mine.
Amen, Ben. That's like the best advice. And it's something that we talk about and I think is absent from the mindset of a lot of potential first-time buyers, where past generations really understood the concept of a property ladder. And I think a lot of today's younger buyers really don't have the patience or the desire to sort of take those steps. And they think they just want to jump from A to Z. And I think it's really important to remind people of that's how those people in Forest Hill, in most cases, got to those houses. They did it sequentially over time in steps, calculated. And we've seen a lot of people that we've been working with almost generationally and families do that. And it's something that is like such a strong reminder that we're always trying to tell a lot of buyers who almost are priced out. And there are so many situations where it's like, listen, you can afford something. It may not be your dream property today, but the fact that you can afford something puts you way ahead of a huge percentage of the population already that may never buy a property. And you look at like other cities like New York, London, Paris, Rome, there are people and there are families that will never, ever, ever own. And one of the things I find really interesting is it's almost like feudalism in Europe, where you see generational money through real estate being passed down to future generations or to kids. And that's almost the flow that you were describing and what you see in other places in Europe, and definitely the way the economies worked in the 17 and 1800s. And we're seeing that happen now because of the prices have gotten so expensive. So
Yeah. I mean, the way to get ahead in this world is to own land, right? So eventually, if you can leverage real estate into more property, then I think you're gonna do well, because as much as people say Canada is so huge, why is land so expensive in Toronto? It's just this is where the action's at. You want to be in the big city, and I think, like I said, we're going to continue to undersupply the marketplace in the future, and as part of that, a lot of single family homes are going to get demolished, right? So we're going to see even fewer low density housing in the city of Toronto moving forward. We're allowing fourplexes now, and I think there is something crazy like 136 building permits issued in the first 3 months. So a lot of single families are going the wayside, and they're going to be replaced by fourplexes and sixplexes. And then areas that are in what we call the MTSAs, the major transit service areas, are going to be allowed high density, right? So a lot of the areas, Steve and I have been working on a bunch in the Bayview and Eglinton area. So a lot of those houses all around that are going to be gone and replaced with 25, 35, 45 story towers. So there's definitely going to be further increases in single family home prices in the city of Toronto.
And are you seeing any shifts with developers responding to or trying to get ahead of trends with potential buyers? Like one of the projects right now by Republic, Bellwoods, has an actual podcast booth as an amenity for the condo. Like, I thought that was really innovative. Are you seeing developers trying to react or respond to some of the needs or potential future needs of buyers and homeowners?
I think so. I think so. I don't think there's any major condominium that doesn't have co-working space in it now. I think they realize that a lot of people are working from home, and they don't necessarily want to be at home, because sometimes you get bothered by people that come and visit you. I do have an office, but unfortunately today I had to be at home with my daughter. But so I think there's huge demand for that. I think there's a lot of people that need to do some type of content to sell their services, right? And they want a podcast to sound professional. My podcast, I have my sound guy come every single time because I am completely tech illiterate, right? So I would screw up the sound. And so I think having a podcast booth where things are set up for you, I think that's fantastic. I think people will want green screens so they can do their little fun videos. Hey, look at this chart behind me. Look at this, right? Everyone loves those charts. So I think that type of stuff, being innovative in the marketplace and seeing where it's going, I think that's only going to help out the sales of projects, and anyone that's kind of stayed and just keeps doing the same thing is going to find that there's less buyers, right? So investors are going to appreciate if your building is getting higher rents than the next one, right? Mm-hmm. So if they buy a condominium and then they find, wow, I'm getting $5.50 in rent, well, the other guy's only getting $5. So I made a good choice. This is a developer that I want to buy with in their next project because they're doing their research. They're seeing what is and what isn't working, right? So co-working spaces and gyms are by far the most popular thing, but guest suites are obviously getting a lot of use, and party rooms, and those seem to be the ones the must-haves. But I can appreciate, I unfortunately never lived in rented a downtown condominium, but I would have loved to have one with a baseball hitting simulator or a bowling alley or a video game room or something like that, or a theater room. I mean, that'd be so much fun, right? I think that would be a great experience to have your friends over, and so maybe you're in 325 square feet, but you're a young person, you're out, you're having a good time, right? You're going to the gym, you're going to the movies, you're going out for drinks, right? Like, you're just sleeping there, right? Why do you need some giant space? You got the co-working space to go and work if you're not working in the office, and you have all these awesome shared amenity spaces. I just see that's a world that some people might dislike, but I think if you started to live it, you would appreciate it. I never thought I wanted to live in the city of Toronto and then I decided, okay, I'm going to try it. First 3 months, I hated it. So much traffic, can't get around. And then eventually I just started jumping on the streetcar and just going places and walking places. And I was like, this is a much better lifestyle than I've ever lived before, right? The thought that I had to get in the car and drive 10 minutes just to go to a convenience store, right? And that's just not the lifestyle that I wanted. And I think a lot of people are going to realize that if they haven't lived that lifestyle, once they do start to live it, that it really is cool, and it really is a great way to live.
Yeah, we've seen, just looking at rental stats downtown, average condo rents for studios, they've appreciated more than any larger size unit. Obviously, they're the most affordable, but people's expectations about how much space they need is changing. And from my parents' generation to my generation to everybody younger, if you go to Hong Kong or you go to a place that's a lot more dense than Toronto, you really appreciate that, a 500 square foot one bedroom is not actually that small on a global scale when you get into super dense city centers. So I think that's going to be a reality that a lot of people are going to have to wrap their heads around if they want to live in downtown Toronto.
Yeah. I started listening to a podcast called The Minimalists, and they always talk about just getting rid of your junk and all the stuff that's you think that you need that you don't need. And so I'm starting to get rid of some junk that I've just been holding on to. And I think it probably would serve a lot of people well just to say, is this something that I really need? Is this my stuff? Do I need all this stuff? Right. And I think it's off real estate topic, but I think to think I just move and I could fit everything in the back of a pickup truck. I'm like, how fantastic would that be, right? To be able to do something like that. And I think we're just going to have to, if you want to live in the city of Toronto, you want to have this type of dynamic lifestyle, you're going to have to adjust your expectations. And that means small, but it's small where you sleep. You can live in the city, and the city is a fantastic place to live, right? In terms of restaurants of every ilk. I think I even mentioned maybe on my own podcast that I would drop my son off at basketball, and he's very close to the Danforth. I would just park and I just go to a different restaurant like every single time, and it was every different nationality, and oh my God, there's food at these places that I got a meal for $20 is better than any $200 a plate Miami fusion, whatever restaurant, just unbelievable food for $20 on the Danforth, right? And you just, that's the just the amazing thing about living in Toronto is all the cultural meshing and all that can come with that. It just really is awesome.
I want to hear from you, Ben. I'm going to put you back on the spot again. It's 2030.
Okay.
How much is a resale condo, one-bedroom condo downtown Toronto? And what is the average price per square foot?
Okay, so let's see. I would say that in 2030, 7 years from now, I would say we're probably talking about $1,600 a square foot. Maybe the average size will start to shrink down. I think the average size now is in that $750 range for something in the resale market. Obviously, a lot of new condo projects are under 600, right? The average, so that will start to trend down over time. Yep. So maybe it's 700 square feet at $1,600 a foot. So what? 1.06 million? Is that what we're looking at? Something like that. Yeah. I should be better at this math. I do this math every single day.
I was sitting back. I'm like, I'll let Ben work this one out. Normally I'd be bringing out the iPhone calculator.
So quite.
It's something we talk about a lot when we're talking about, how much would a one bedroom be, and that's a lot to think about. Yeah. But 7 years is not that fast for the average one bedroom to hit $1 million.
Yeah. I remember tracking the market back in. What year was it when we had a bit of a bump in the road? So 2012. So when I was tracking the new condo market, really hot. 2011 set a record. First quarter of 2012, super, super hot. And then projects were getting up to $600 a square foot. So 2012. So that's 11 years ago now. So to think that projects were launching last year at $1,600 a square foot, which is essentially the same level of spec, right? So it went up $1,000 per square foot in a decade. Right. So, if I say 7 years and 400, then that's a lot less than what we've seen over the last decade. So we may have passed the golden age of appreciation for investors. They might need to take a little bit of a longer mindset this type around and accept a lower level of return. But I still think it's a pretty safe bet that Toronto will continue to be a global city. It will continue to be a desirable place for people to come and to study and to be a tech entrepreneur and all the other fun things we're doing in the city.
Awesome. Well, thank you so much, Ben. It's been a complete pleasure. I've really personally enjoyed this discussion. I'm glad that we were able to share this with our viewers. And I'm so glad that yet again, we can have our rock star, Jerome, join us for this call as well. So thank you everybody for tuning in today. Please be sure to hit that subscribe button, smash that like button. And if you have any comments or anything constructive to share, please be sure to comment down below. We'd absolutely love to hear from you.